It's Thursday, September the 23rd, the first full day of fall.
And you stepped out this morning.
That's why I have on long sleeves.
And it was crisp. It felt great.
See your breath.
Yes.
Which means duck hunting season's coming.
That's what you're thinking about. That's right. It's coming.
It's coming.
Well, it's been quite a week as you have followed the market, and we bring it to you. It is and was and will continue to be what we said September would be. The volatility is here. It was the only thing we missed this week. We didn't predict early in September that it would be a China real estate company that would conglomerate that would cause the volatility. We weren't able to foresee that, but therein lies one of the major causes of the volatility this week.
Yes, and we certainly don't own those types of assets in your portfolio. So you were impacted certainly just by the news itself. And the news is not over, regardless if it's the company that you're talking about in China, or if it's retail numbers, or if it's unemployment numbers. We're going to continue to get good news and bad news, and I think right now everyone's going to be focused on bad news.
The Fed talked yesterday, Federal Reserve talked yesterday, and they gave clarity in that the tapering should begin, in their view, announcement in November, beginning in December, and by late fall next year, tapering should be complete.
Also, it looks like that the first rate increase could occur next year versus in 2023.
Right. So they've begun to lay it out. That seemed to give some stability to the marketplace, and where it was even on the news of the China event. Today's a big day, and the next couple of days are a big day in the China series. Again, what it is the second largest real estate conglomerate is on the verge of potential debt failure, not being able to pay on its debts and interest, potential bankruptcy. Will China, the government who own it, keep it going or not? Who knows what a communist government is going to do. But that's going to play itself out, and it's not as big in terms of numbers from a contagion standpoint that we believe, and those who are studying it believe it would spread worldwide. It's just it's a block that's dropped in the China.
It's the investors. It's those that have invested in those in these empty apartments, that these ghost cities. China has many of those cities. They're having to pay for it now.
Yeah, the ripple effect is really in China and not so much over here. So the Federal Reserve kind of gave a calming. The marketplace is watching what unemployment is doing. Unemployment numbers were new claims went up by 16,000 this morning in its announcement. But still, we're looking at finishing the third quarter, going in the fourth, and the market still having the potential to be up. So we're even talking now this morning about maybe next week taking some of that cash and buying a small piece back into the marketplace and taking advantage of the dip that has occurred. We're still positive. We still are looking at it. We've looked at portfolios and have met virtually every day this week when we're talking about it. And we got plans on the table of how to go either way if we needed to. So want to assure you that you're in good shape. We feel we're in good shape. And if you ever have any questions, you can always call us on
336-544-6800.
And remember, it is your money.
And your money matters.
We'll see you next week.